Hi everyone, this is Sharandeep Kapoor. In this video, we'll be discussing about the important economic data which is going to come in this week. So this week is very important in terms of that there are a lot of important economic data going to be released. Why are economic data important to you as a crypto trader? Now for that, you'll have to understand that number one, the total amount of money in the world is limited. Okay. So the total amount of money is going to be divided into only four assets, which are very liquid to divide it into. So, number one is stocks, number two is crypto, number three is bonds, and number four is cash. So, these four assets have very high interconvertibility of money into each other. If you look at assets like real estate or gold or land, these assets take a lot of time for somebody to think and make a purchase. These are not immediately buyable assets. So for immediately buyable assets, there are only four assets in which the money will keep on rotating. Now, if the economy is supposed, if the economy of the country or the economy of the world is supposed to go up from here, money will shift towards stocks and crypto. And if people think that there will be some sort of a disturbance in the economy, money will shift towards cash and bonds. Okay. So these economic data provide us with some indication towards how a country is performing and where will the money flow shift. Okay. Also, if you may know, there are a lot of results of stocks and companies also coming out. So the result season has started in both US and India, and it will be important to know how the companies are performing. So, for example, the IT sector of India is performing very well. Now, why does this matter? So basically, if the IT sector of India is performing well, which means to some extent that Nasdaq of US will also similarly perform better. Now, Nasdaq and Indians IT sector, these are tech stocks. So tech stocks are usually linked with higher risk-taking capabilities. So whenever tech stocks or Nasdaq goes up, crypto also goes up along with it because both of them sort of signify risk assets more. Okay. And today, the results of yesterday the results of HDFC Bank came out and they came out negative. So that is a counter indicator to these things. So a lot of data which you may see here will be counteracting each other. So there will be one good news and one bad news. Okay. So let's just go through this data. So yesterday on the 16th of January, we got China's GDP data, China's unemployment rate, Germany CPI and Canada CPI. Okay. Now, out of this data, China's GDP came in slightly lower than expectations. China's unemployment came slightly higher than expectation. Okay. Now, China is the second biggest world economy. And in terms of crypto, although China is not that important, but in terms of economy, China is very important because China handles the export of a lot of material goods and raw materials. So, the world is sort of interconnected to each other. So, if a country performs worse, so if a country like China does not perform good, the whole entire world market is going to get affected. In terms of cryptocurrency, so US is the biggest economy of the world, and US is the most money into crypto. China has sort of stayed away from crypto, so has South Korea. But if for in terms of important crypto countries, US is the most important, and second is Europe. Okay, coming on to data which we can expect today. So United Kingdom is going to announce their CPI data, and US is going to announce their retail sales. United Kingdom is also a very important country in terms of crypto. On the 18th of Jan, we'll have the US Manufacturing Index and the OPEC report. OPEC is the Organization of Petroleum Exporting Countries, which decide the prices of petroleum and natural gas. So their reports are very important to judge how crude oil is going to perform for here. And crude oil is a very important indicator to any country's economy because basically crude oil, petroleum, diesel, gases, uh, and other raw materials used for building things. So they are very important to any country's economy. Whenever the price of crude oil goes up, economies tend to go down, and whenever the price of crude oil goes down, economies tend to perform better. Okay. Also, crude oil is a very important indicator in inflation, in calculating the inflation. On Friday, 19th January, we will get the UK retail sales and the US existing home sales. So these are the data which we are going to get. Now let's discuss what do we have to do. Okay, so now let's discuss what should we do. So number one is to hedge all your positions. So basically, if you have bought Ethereum or bought Bitcoin, you can buy a put option to hedge your position. If you are long futures, you can hedge your position using put options. If you are short Bitcoin or Ethereum, you can buy a call option to hedge loss on your upside. So basically, you can hedge your positions using options. Number two would be like instead of hedging, instead of the whole concept of hedging itself, you can avoid trading futures for this week or other high leverage instruments where you can get liquidated. So in options, in comparing futures versus options, it will be probably easier to get liquidated in futures. So don't trade futures at a high leverage because you can get liquidated. Okay. Beware of V-shaped movement. So this is coming on from the previous point. This is a screenshot of Ethereum yesterday. So Ethereum started from 2500, it went up till 2600, and now it is back at 2550. So see, it went up 100 points, that is 4%, and it went down 50 points, which is 2%. Now, if you had longed Ethereum somewhere around here, you would be in a loss right now. Okay. So in terms of dealing with V-shaped movements, you can either take a premeditated trade. So you can either long it here before the move happens, or you can just not trade it at all. And if you have a futures position open, so let's say you bought futures here, it can be the case that you would be in a profit here, but if you didn't close out your position, you could come back into a loss here and you could even get liquidated. So you should be aware of V-shaped movements like this, and you should hedge your positions actively. Also, a good strategy to take in times of high volatility in the market and high possibility of price deviation. So if you feel that Ethereum is going to go very Ethereum is showing to go a great up move from here or a great down move, but you're not sure of the direction, or if you feel that there is a lot of news flow coming and you don't know which direction the asset will go, you can take a long straddle. A long straddle involves buying at the money call option and a put option. So whether Ethereum goes up from here or Ethereum goes down from here, you will gain if Ethereum moves a lot in both directions. Also, volatility is supposed to be increasing in times like this. Whenever a lot of data comes, whenever moves like these comes, volatility increases. So you can also look to sell the volatility when volatility is high. Okay.